Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market, that is the crypto market, the NFT market, and the bond market, and whatever else we might need to discuss in order to try to make sense of the market that is unfolding in front of us. Loaded up for discussion today, we have markets were down a little on recession fears after low inflation numbers yesterday. China tariffs have risen to 145%. I believe I saw this morning as well that China have retaliated, if that is even possible. You've doubled up the retaliation. So we'll get into that in just a minute. We've also got some information about Wayfinder's Prompt token, where it came out kind of disappointed at around a $200 million FDV. And the Prime token is down further. There's some other complications with the launch of that token as well. We'll be diving into that shortly. And other big news, Cryptopunk Alien sold for 4,000 ETH. That was a 500 ETH loss, $10 million for the seller. We've also got the latest on price action on crypto and NFTs, plus the general discussion on what's going on at the moment. I have Legendary, Bread Guy, and our partners from Silvermine Capital. We've got David, investment partner from there with us today. Cannot wait to get into the conversation. But just before we do, just a reminder, friends, that nothing that we say here is financial advice. This market is very, very risky. And so please proceed with caution and exercise some of your own judgment. With that out of the way, Brett, I knew you weren't ready for it. How are you doing? How are you feeling?
It's coming right here. Feeling great. I was telling you guys before the show, my first vibe coded app, fully vibe coded smart contract, front end, everything else went live yesterday. Put $100 in there just to see who would be interested in going for it, fucking around with it, trying to break it. And they got it. They took about an hour, something like that. I just hid it behind a riddle with some basic shit. Like you have to go look through my Twitter profile to get some keywords, stuff like that. Feels uniquely empowering because now, like I'm technical, but I am more of a product person, you might say. So like to be able to actually like bring ideas to life with just some prompts is pretty fucking cool. Like I said, everything from the smart contract to deploying it to the front end to like I work with the smart contract. I've never had that power before. Like I did, but like I've never actually taken the time to work through the whole thing. I usually get caught up in one of the things, whether it's in my local dev environment to deploy the thing or like whatever. It's just like something's always stopped me. So it's, yeah, pretty powerful to see it through.
Sounds pretty fun. Very, very fun. And is it like something that people can participate in right now, or is it done for the first round?
Yeah, actually I made it so anyone can do it. It's literally just like you go to the site, you lock up a certain amount of ETH and you hide it behind a secret, like a secret phrase. And then anyone who guesses the phrase can actually unlock the ETH. But it costs like 70 cents ish, about $1 to actually guess. So if people are guessing wrong, it adds to the pot, and then whoever eventually gets it right gets all of it.
Nice. Pretty fun game. Give it a go. I'm going to try it later. David, how are things going on your side? What's the investment angle at the moment? We were talking a little bit at the top of the show. It's pretty confusing at the minute, but how are you seeing things?
Yeah, for sure. When you live through or are in like periods like this, it's obviously naturally human psychology incredibly unsettling. There's so much uncertainty. It feels like it's the end of the world, but historically 100% of the time, it's the best time to invest, right? And it's just very much against our nature and human psychology because it's always like, well, what if this time it isn't and it's over? I remember when COVID was happening, like that was like an actual scary time. That was when I was like still at Goldman. You're watching the market like circuit break every day for a few days, and COVID changed how the world was operating in such a quick time. I remember thinking like, wow, maybe this is like how markets change forever. But sure enough, 6 months later, that was the best time ever to invest. Like this time, I don't know the severity, how severe this is, and like it kind of depends on a couple people in the world dictating and deciding things, which is scary in itself. But there's just a lot to think about and a lot to analyze. And I think it was Legendary tweeted, anyone who says they know what's happening or about to happen is lying or just like tweeting stuff like no one knows. So it's an interesting time to be a part of and be watching, but remaining cautious. But long term, got some thoughts we can dig into.
This stuff is so whipsawy. Like, as someone who's like not watching the charts, just like, keenly on my end, like just trying to go by sentiment on the timeline, it's like everything was down crazy, and then everyone was making fun of everyone because they're like, oh, Trump gave you the playbook, he said to buy right now, then he came to the table and like market's pumped, and they're like, biggest single day in history, and then it's like has the meme of the guy who's just like whoa, because it's going up 5% after dropping 70%, like freaking out, and then like now it's down again, right? So it's like, yeah, man, like this stuff always takes longer to play out than I think anyone ever, especially myself, actually thinks it will. So yeah, I think we're probably going to be in this situation for a while.
Legendary. Can you guys hear me, by the way? My computer's being a bit slow.
Yeah, you are lagging a bit, but we can hear you perfectly. But image-wise, I think you had a little lag going.
Okay, so maybe my video is lagging and the audio is okay. Okay, well, we'll proceed with that for a bit. I'm going to try and fix this in a moment, Ledge, so maybe you'll lead on the next set of stuff. But just checking in with you, how is it going your side? Coming towards the end of this week, it's been a bit of an insane week. How are you kind of coping with it at the moment?
I'm just trying to, well, there's two things going on. A, when I was buying stocks, etc., at the start of the week, I wasn't selling them into the pump. Like, you can day trade that if you want, but I'm like thinking if I have a 10% discount on a day, I'm going to buy that. And on a horizon of 10 plus years, it's going to be a nice buy. That I'm happy to DCA in, even if it takes the next 3 to 4 years to just keep DCAing in. The thing that had me more worried, which I was talking about on the show, was the exchange ratio between the dollar and the euro. As someone who's pricing natively in euro, dollar's down again a couple of percent. Dollar index is down as a whole. Now we're trading 1 euro is $1.14. That was almost at parity like a couple months ago. So I'm pretty happy that I moved a lot of my stable coins to euro already a couple weeks ago, and the remainder of my stables, I swapped all of them into euro this morning because euro might get weaker, dollar might get stronger, but I'm like, I'm not here to trade foreign currency risk, and I'm not an FX trader. So I just want to chill in my, if I chill in stable coins, I want to chill in my home currency. That's basically the thought.
Okay. That sounds like it makes sense. That's definitely something we don't usually consider. But that's helpful to kind of keep in mind for people. Ledge, I'm gonna are you able to go through the price action and everything? Because I need to figure out this thing. I can't see anything at the moment. I'm completely blind.
Awesome.
So I'm going to try and drop off and come back, and you take everyone through the news if you can.
Yeah, wonderful. Let's do that, starting with the price action first, as usual. It's a bit of a green day for BTC, at least, being up 1.3% over the last 24 hours at 82.6K. ETH is down another 1.4%, sitting at $1,560. BNB, very similar to BTC, up 1.6% at 583. And Solana, out of the majors, is having the strongest move, up 4.4% at $119 now, being bigger than USDC by market cap again. So I don't need to scroll anymore when we want to see the Solana price. Getting to the meme side of things, pretty much a green day in the low single digits for most coins. Dogecoin is up 1.8%, Pepe up 2.4%, Trump up 1.4%, Bonk is up a bit more, 6%. Once more, Bartcoin is leading, up another 20% at 87 cents, up more than 100% now over the week. This is utterly insane. I think B-Check said it yesterday. It's probably the best performing asset in the reasonably sized meme coins and cryptocurrencies overall. And it continues to take up. That is very impressive to see. SPX Murat's coin up 14%, Dogwave Head up 6%, Pudgy up 4%, and another big mover, Popcat, actually up 30%. Up 30% over the last 24 hours, up 35% over the last week. So the majority of the move yesterday. MOG up 6% on the AI side of things. AI16Z up 2.5% only. So pretty green day for memes, but once more, Fartcoin is definitely leading that. Moving on to the main headlines, we're gonna have to talk about the market again. We have inflation numbers. We have another set of tariffs between China and US going on, and that has been driving the market down a bit. I'm gonna dive into that a bit later in the show. Second main piece of news is the Prompt TGE Wayfinders token that came out yesterday, right after the show. There's been a couple complications around the claim, which definitely also have led to the FTV of the token going down, as well as the associated Prime token being down another 8%. Bichek and Brett are going to take us through that news. And then we have seen, third piece of news, a massive CryptoPunk alien sale for 4,000 ETH. However, the seller is down 500 ETH on the ETH side of things, but more significantly, down $10 million on that sale. In terms of some notable price action, on Bitcoin, we have the staking protocol Babylon going live, trading at $800 million FTV. We have Bitcoin up 100% to 24 mil over the last 24 hours. Fartcoin, as we said, is also up. And Hype has had a good day as well, up 12% to $15. Moving over to the NFT side of things, it's pretty slow day, I would argue. Bored Apes basically unchanged at 14 ETH. Doodles, they are down a bit. They're down 4%. However, on the Pudgy side of things, only down 0.5%, sitting above a 9 ETH floor at 9.14 ETH. So for the NFT side of things, it seems to be a bit more chill. One of the collections that I saw actually moving was on Hype. The Hypeos are up, I think, another 20%, sitting at 1.4 ETH, trading pretty highly, at least in ETH terms. In dollar terms, they unfortunately are down as well. And then going back to the Web3 Roundup for the rest of the news from around the space, we have Bitcoin, the tongue-in-cheek BTC competitor on Abstract, soaring to 15 mil before it pulled back to 10 mil. Definitely saw that dominating my timeline more and more, and driving additional attention to Abstract, which I think is very, very helpful for the L2. Tons Protocol raising a $10 million CSB, which is led by A16Z to continue to build the blockchain for communication. Meanwhile, also announcing a $40 million Series A, led by Framework Ventures to accelerate the rollout of BTC-denominated life insurance. And that's something I'm curious to understand a bit better how that works. VanEck filing for an AVAX ETF. And in terms of some more news from around the space, ETH, the crypto casino founded by Mando and Keyboard Monkey, did go live yesterday. I think I saw one of them posting that they did $2 million in betting volume in the first 24 hours. So definitely a successful launch on that end. Rarible launching an NFT marketplace on Mega ETH. And last but not least, the founder of Silk Road, Ross Ulbricht, will speak at a BTC conference in Las Vegas. And right in time, Bichek is also back with us. That is beautiful to see. I'm not going to go straight to you, though. Brett, is there anything from the roundup that is standing out to you that you want to touch on?
Yeah, obviously, the one that's most pressing for me is the Rarible thing, and it's less about Rarible specifically. So what they did is it's Rarible.fun. Like they're kind of doing like the Blur thing, leaning into a faster whatever marketplace. They launched it on MegETH because MegETH is fast, and it's mostly just like we're seeing this from a lot of players out, on the back end managing a lot of these conversations, and it's fun to see a lot of teams coming forward and saying like, oh, crypto blockchain whatever is pretty slow. We see MegETH as a way to like challenge ourselves and like kind of change the actual like perception and user behavior, expectations, all that shit of blockchain. And they usually are like, we want to test our shit on your shit. Another example of that, Tuesday of this week, we also announced Redstone had an Oracle update, and it's like the fastest Oracle ever. Like you can't make Oracle sexy, but like just for reference, like most Oracles, whenever you update them, are like every like 200 milliseconds is the fastest. Usually it's like a second to 2 seconds. And if you think about how that works on chain, it's like that is what allows for smooth liquidations, right? If you have the actual price in real time, because the price keeps changing, right? Everyone knows price is something that happens in real time. But if you only have the latest hour of pricing on your smart contracts, that means the logic that can actually take place, like that do liquidations, give you loans, all that shit. It's using outdated information, like basically the second it gets it. And the Oracle team or the Redstone team pushed something that's like it's updating every 2 milliseconds, which is faster than fast, right? It's fucking fast. And now this is another case of Variable stepping forward, and they developed a new platform for us, fast, fun, whatever. And you're gonna see a lot more of this shit. I think it's pretty cool to see the industry stepping up and trying to accept the challenge.
Awesome. And is it already live for testing?
It is, yeah. So if anyone wants to go play with it, but they need ETH, let me know. I can give them some testnet ETH. It's just testnet.rarible.fun. There's already some small collections on there, but like if you just want to goof around and see how it feels, yeah, let me know.
Nice. B, checking back in with you. Are you good audio wise? Are you good video wise?
Yep, I think so. All good. What else is catching our attention? Bread's mentioned. What about you?
I like the $40 million raise for the BTC life insurance with the spin to have inflation prone economies. I think so. Maybe it's a bit more context on that. It's regulated by the Bermuda Monetary Authority. The entire life insurance policy will be denominated in BTC, so it's not the part of that, or you have a small BTC exposure as part of the policy. The entire life insurance will be denominated in BTC, and I find that, I think, interesting. I think a bit risky. I think you have to be super bullish to be like, yeah, I'm going to put my entire life insurance in Bitcoin. But I also think it's fascinating or cool that you can do so.
Yeah, I think that's a pretty cool one. I was reading a little bit about it. So just everything's basically just denominated in Bitcoin. So there's no dollar aspect to that. I agree. I think that's pretty interesting. David, before we get into the main stuff, we're going to hit the main headlines in a minute. Wanted to give you a chance to speak to anything else that you're finding interesting, or any other observations you're making in your work at Silvermine, how you're observing the market. You've obviously got a lot of capital to deploy on both the pre-seed and seed side, as well as on the liquid strategies too. So what are you guys kind of looking at the moment?
Yeah, I mean, firstly, I think you covered Fartcoin, right? Like that is probably the best performing asset in the world, or at least in the top 5 over this week, right? Which just
tell your LPs that's how you're going to allocate their money.
I wish, but we do have a Fartcoin position, but not through the LPs.
Okay.
But I felt like we find that at the moment, right, we're just kind of glued to the macro sort of stuff. And it's interesting, right? Yesterday you saw like Babylon launch, probably pretty disappointing for most people after raising 88 million to that sort of level. I think expectations were a lot higher, which kind of just summarizes where we are. As you guys know as well, similar to us, like we're still waiting for a lot of projects to TGE that either raised 2024, maybe some in 2023, and people are scared to do that. And like, obviously, right, you're seeing projects like Babylon come out, they've raised 88 million and they're only getting 800 mil FTV. It's scary times. Exchanges now are just going after projects and gouging them in terms of like percentages, especially if you're a smaller one versus a hyped one where you know you're going to get volume. So it's super tough out there for projects that are waiting to launch. And yeah,
when just to give some understanding to the people listening in, you said Babylon came out at, I think it was 880 million FTV, around 900, when they had raised 80 or so. Just explain to people why those two numbers just kind of don't sit together, and why that's so concerning for either investors, but not just for investors, right? Investors, community, team members, everyone in the kind of in the whole ecosystem.
So yeah, for sure. Like most projects are not raising 80 million dollars right before they launch. That's an incredibly large amount. And when these projects are selling the tokens ahead of that launch, they're selling them to investors at an FTV, right? Now, I don't know the exact Babylon numbers, but I think they sold around between 20-25% of tokens to investors before they launched. So let's say the round was priced at 500 million FTV. It could have been higher. It could have been at $1 billion. I don't know. Those VCs who are going in, right, are trying to do it because they want a 5 and they want a 10x. So coming out at 800 million is not on their bingo card. That's not what they were expecting, not what they wanted. When Babylon was raising, the expectation from those VCs, and these are some of the biggest VCs in the world, right? Galaxy, Hack, Polychain. You're expecting 2, 3, 4, whatever billion, or hoping for at least. And as I've said before, you've got to remember the VC game is not about everything being a winner. This happens. Like even getting your money back sometimes is a win. But this is a project with a lot of TVL, had a lot of promise, a lot of hype, one of the best funded projects coming out of last year, and it's launching at 800 mil FTV. That is not a good signal to any other project that wants to come out and launch as a proxy. And then the other thing I was hearing is like a lot of exchanges kind of using Babylon as a bit of a proxy to see how well it does, especially within the Bitcoin ecosystem, of then what tokens do we want to list? How much are we going to be charging these projects to list? Remember, a lot of exchanges will take a percentage of token supply, as they don't call it a listing fee. It's a marketing fee. It's whatever you want to call it. You'll see like the exchanges saying, we don't charge listing fees, but they're taking tokens for whatever they want to call it. So those numbers start to creep up in periods like this. So for projects, it gets harder and harder. They have to give away more token. And guess what happens to those tokens when the exchanges get them? They sell them. So more sell pressure, bigger sell pressure creates a really bad flywheel all around. So it's just a really tough time overall for projects wanting to launch, and hence why they're not launching, right? And you're getting this big buildup of TGE events, and in some cases there's not endless runway for these projects. They run out of money, and then it's a zero. So
yeah,
it could get pretty choppy out there.
Interesting. Two really important points I think you made there is, one, the commentary on, okay, fine, on the one hand, teams are saying, look, we're waiting for better market conditions, but arguably, and I think it might have been Oxy who pointed this out as well the other day, even if the team thinks, right, we're ready, we want to go, if they can't secure the exchange that either they want or that their investors are like really, really wedded to, then that could realistically be a very significant hold up. And I like the more nuanced point you made as well, which is, we've got teams launching within different ecosystems now. There are so many tokens all across the board. Babylon being held up as one that was Bitcoin staking specifically, and there was definitely a hype around Bitcoin DeFi. Like everyone wanted to get a slice of Bitcoin DeFi for a period of time, including ourselves, to be honest. And it's just not obvious. Well, it's never obvious where the value will accrue like 3 to 6 months down the line. And in this particular market, it's getting harder to determine that anyway, just in general. So very, very interesting points. We're going to get into more of the market stuff as we get into the main headline today. But before we get there, let's go over, this is a pretty exciting one. We're going to go into our Mode partner segment. Some pretty awesome stuff getting built out on the trading side, incorporating some AI. Legendary, what do we have to share here?
Awesome. Mode built the copilot for traders with Mode Trade. They call it the Holy Trinity of Trading, and it just launched yesterday. Mode Trade is the first exchange to integrate predictive AI directly into the trading experience by combining perpetual trading, predictive AI, and synthetic asset data. This gives you the edge with the types of predictive tools which are usually reserved for institutional pros. And there are three main components to Mode Trade. First, at the core sits the perpetual trading platform, which is powered by Orderly. It provides traders access to over 100 trading pairs with up to 50x leverage, including all your favorite coins like ETH, BTC, Solana, and even the best asset in the world, as we call it, Fartcoin. On the market making side, Mode uses a so-called synthetic proactive market making algorithm. In simpler terms, this algorithm brings the precision of sex trading to DEX liquidity pools. And one of the things that stood out to me is that the platform will soon include tokenized stocks, which is pretty cool because right now there are only very, very few platforms offering tokenized stocks. And I like the idea of being able to trade stocks around the clock and not be bound to trading hours. Moving on, however, to the next component, Synth. Synth is a unique model to attempt to forecast the price of BTC, which we have touched on on a previous mode segment. The model leverages the synth subnet on BitTensor and its synthetic pricing data to allow agents and LLMs to create forecasts and use probabilistic reasoning to help you understand where the Bitcoin price could move. Remember, that was the segment that we did on the Monte Carlo simulations, which I very much liked in particular. And last but not least, the third part is the AI terminal. The terminal simplifies complex trading actions into intuitive text-based commands, allowing you to manage your on-chain holdings effortlessly. That means you can swap, bridge, manage all of your tokens in a very convenient and useful way. So how do you get access to Mode Trade? First of all, the perps trading part is open to everyone. However, if you want to get early access to the AI terminal and synth, there's currently two ways. A, you can stake more than 400,000 VMode tokens to get full access to that tooling system, or you can be an active trader, as Mode will give away whitelist spots, and the team will share more details on that on X. And we will continue to share insights and updates as part of our ongoing partnership with Mode.
Very, very cool. I'm super intrigued to like combine the two things together. We've been playing around with the AI terminal a little bit, like getting some data and being quite inquisitive with the terminal. But now being able to combine the two, I'm just very curious how that'll play out. Ledge, what are your kind of thoughts on it?
Yeah, my favorite is synth. Like I said it on the segment before, the way how you can basically mine the most probable BTC price path into the future and have this whole range to look at. And being able to look at that and to trade, I think is fun. But then also the tokenized stocks. Like I shared it this week on the Discord with, what is it, BackedFi? With the Coinbase stock, where Lito on X was sharing that there was quite a nice arbitrage opportunity where the Coinbase stock traded off-chain, so to speak, at $177 on-chain. You could buy it for $170, which I ended up doing. And you can then either wait for the on-chain gap to close or to redeem that. And I think there's going to be more opportunities like that if there's going to be a sort of more fragmented stock market on-chain.
Yeah.
The only thing is you need to have like a reasonable amount of liquidity, right? I think the Coinbase one has like 700K of liquidity on base. So if you do that trade with 50K and you make $6 per Coinbase share, that's fine. I think for someone like David, it might not be as interesting if he wants to come in with a significant sum to deploy arbitrage strategies. You would need way much more liquidity to do that in a meaningful way.
Yeah, super interesting. We're definitely going to keep an eye on that. And as you say, we'll continue to kind of share some updates on the Mode side and how they're integrating the AI into the perps trading. So let's keep it going now. I want to get into the main headlines today. Ledge, you've been doing an excellent job this whole week, just kind of taking over on the macro side and just giving us the most recent update. Every day, there's some turn to discuss. This time, by the time I was writing the headline, it seemed like a bit of a downturn. Now it seems like it's actually back a little bit. Just to set the scene for us here, how we're closing out the week. What do we need to know, and what are your thoughts?
Yeah, absolutely. The S&P 500 yesterday at least dropped 3.5%. Nasdaq a bit more than 4%. The Dow gave up 2.5%, but in the pre-markets, we are seeing a bit more of a positive price action again. However, it wasn't just the US. We saw a very, very similar picture in Europe as well. And the message that we're getting from the market is we had this massive historic pump just 2 days ago, and we basically sold a lot of that off already yesterday. And that is despite the fact that we actually have US inflation falling. And if you look at the inflation data, the US CPI for March came out way softer than expected. So headline inflation eased to 2.4% year over year, down from 2.8% in February. The core CPI came in at 2.8% as well, which is the lowest since March 2021. And a big part of that move came from falling used car prices on the one hand, which dropped 4% month over month, but also gasoline, which we reported as the crude oil price fell, so did the price of gas. And that did help to bring down the overall number. So on paper, you would actually think you can be excited about that because inflation is going down, and you might see some rate cuts coming in as well, because you think that this is exactly what the Fed wants to see, but it's not that simple anymore. Because while inflation is coming down, President Trump's tariff policy is going up. As you said it at the start of the show, US has raised tariffs on Chinese goods to 145%. China has responded in kind with its own round of hikes, setting the tariffs to 125%. And that is definitely an inflationary move. So the market looks at the better inflation numbers as a more like temporary relief. And this is also where the Fed comes in. Fed officials, including Boston's Susan Collins, have started to signal concern. She said, yes, inflation is slowing, but with tariffs now clouding that outlook, the Fed might need to hit pause on rate cuts. And that, again, led to a pretty steep increase in recession fears, as we can see on Polymarket. I think just yesterday I reported that recession fear was down from 65-66% down to 50%, and now we are basically back up at 63-64% again. So sum it up, yes, we've seen nice inflation numbers coming out lower than expected, but as the tariff war is still going on, the Fed is being more cautious with when to start with rate cuts, and that has led to more uncertainty in the market.
Okay, so you definitely you've got that question about rate cuts that's kind of always been hanging over us for a while. David, I wanted to come to you here just to ask, like, to what are you attributing this? We had that record bounce the other day, and people got very optimistic about that, I think. To what are you attributing this? I mean, I say there was a little bit of a downturn, but then at the same time, we kind of bounced back up off of that over the last like 4 hours or something as well. So there's a lot of noise going on. We haven't had you with us for a couple of weeks. We'd just be curious to hear your general thoughts on the last 7 days, because it's been a bit of a roller coaster. So just going to leave it open for you to kind of take it in the direction you'd like.
Yeah, I mean, it's super hard looking at like the intraday moves, the day-to-day moves of these markets that are just so driven by the headlines and what's coming out of the White House, of which no one knows if they're permanent, temporary, long-term decisions. The only thing that I can really look to, if you're looking overall of like what's going to happen, there's the one thing that is happening this year is the US need to refinance a whole ton of debt. I think it's like 7 trillion out of the 36 trillion. Like, that is going to happen. And I think the most the point that really resonated me with the most this week was the fact that when the stock market was crashing and yields were going up, which is very unusual, and to the theory of like he's crashing the market so yields can go down, kind of, oh God, that's not happening. That's when you started to see, okay, we're pausing tariffs. So it's clearly like that's one of the things that they really can't afford to let happen, is let those yields rise, because they know they have to refinance all this debt, and this has to get refinanced at a lower rate, or they're in a really bad predicament. And those rates, obviously, they hit house prices, they hit mortgages, they hit businesses, they hit everything. People on Main Street, mom and pop shops, that they're really saying that these are who we're trying to support now. Those rates hit those people so hard. So I have to think that the long-term plan here is to get rates down, and then they refinance the debt. When that happens, liquidity flows back into the system. Banks start lending again, money comes in and everything. And one of the best proxies in terms of markets and stuff is global liquidity, right? So and that's already started to increase. So that's something we're looking at closely, is the global liquidity, and just watching how these yields are behaving. And the Fed has the power, right? Whether it's to cut rates or just to come in and start buying bonds. That, in my mind, is going to happen. Like, rates are going to have to come down, because otherwise the US are in such big trouble, and Trump doesn't want that. The stock market can go up and down. It's quite easy, like whatever. Refinancing debt that happens and it stays there at a certain rate. So that's what I'm watching very closely. And I think it was very telling when those rates went up, the reaction that they had to do and the policy they had to change.
So why do you think now then? So what are you attributing so we're back at 4.4, I think, on the 10-year. Like, what are you attributing to that? I think obviously there was a lot of conversation about, are China selling their bonds? Is it Japan? I think people were leaning in the direction that it was probably Japan selling at that period of time. But what's your thought there? Why has it gone back up to 4.4, and what do you see next potentially?
Yeah, I don't think I heard there was a Japanese bank that went under and had to force sell some debt. Maybe China was selling some as well. People were just rotating out of debt for gold. Who knows? It's so bad in terms of market structure, seeing rates go up while the markets drop, because you're basically saying you're losing confidence in American debt as a store of value, and you're saying I'd rather have cash that's yielding nothing or gold. So that's a scary thing. Who was triggering that? Was it China? Was it Japan? As a warning? I'm not sure, but it would be incredibly distressing if that trend continued, and every time the stock market was crashing, yields were going up, and that's why the Fed would have to step in. But that's a pretty dangerous spiral, right? The Fed having to come in is essentially like they're printing money to say, hey, we need to enforce these rates lower, but everyone else is losing trust in the US debt. And then that's when you get into like a fourth turning situation where the whole system has to reset. So I don't think we're at that point where the world loses confidence in US debt. And if we do, like, holy shit. So let's just hope that doesn't happen. But I'm pretty confident towards the end of the year, they're going to have to print money, buy bonds, force rates lower. So hopefully that then has the correct effect on markets and we start to go back up. But it's just so crazy at the moment. Like, it's just not behaving how you would ever expect.
Okay. As you say, very, very complicated, but thanks for your thoughts there. Super insightful. But maybe a follow-on question for Ledge or Bread on Bitcoin itself. Like, thinking about where the value is held. You said, okay, people don't want to hold dollars themselves. They also don't want to hold the US debt. Gold has been going towards an all-time high for multiple weeks in a row now. So gold is doing incredibly well at the moment. Is Bitcoin behaving well, in your opinion, averagely, poorly, as it relates to its value proposition as a store of value? Just going around here, Ledge, what do you think there? Is it behaving as it should? Is it behaving as you'd like it to? Is it going to be what it's supposed to be?
It's not behaving as well as people would love it to behave. I remember the one day when BTC was up and the stock market equities were already dumping, and
there was one day, right? Literally one day,
celebrating. We are decoupling. This is it. This is BTC's big moment and big stage. And one day later, BTC, ETH, and everything nuked as well. Just looking at how well gold is doing at 3.2K, up another 1.4%, up another $44 over the last 24 hours. I think this is where money is flowing in. BTC is putting up a good fight, but I wouldn't say it is the flight to safety that we would like it to be. And as David has said previously, I think in a situation where the yields are so high and people are like seriously debating whether you think that US debt is a safe haven where you're like happy to lend money to the States and park some of your cash there, I don't think that anyone wants to significantly deploy money into something if you basically fundamentally are worried about the US dollar per se. Then yeah, you might buy a bit of gold, you might buy a bit of BTC, but it's not a situation where like, okay, this is it, I'm going to go all in BTC. At least that's not how I am currently reading the markets and the price performance. So to sum it up, yeah, it's doing okay. Not super impressed.
Okay. David, do you have a view with respect to Bitcoin's performance?
Yeah, I agree with what Legendary said. I think I do like to look back at like the COVID crash, right? And what happened then when the markets dropped. I think it was like 25, 26% over those 3 days. Almost similar decline over the last couple of weeks. When that happened, Bitcoin was at 3K. Now it's at 84K. It's obviously not the best comparison, but kind of does prove the point. Long-term store of value in between these like market-defining crashes. I still do think if everything happens, everything markets start to come back, everything gets under control, trade wars start to ease, I think Bitcoin does really, really well in that environment. Just on the back of it holding up relatively okay in this environment.
Okay. Interesting. That is very, very interesting stuff. We're going to keep kind of attacking this as we go. The news keeps turning. Routine is kind of helpful to zoom out sometimes and try to take a perspective from a bit more of a zoomed out perspective every now and again. I wonder whether we should park that because we've spoken about it so much this week. We've spoken about it a lot today. We'll just keep monitoring it. We'll be back with it next week. I think there's some other interesting stuff going on in the space, fortunately, because sometimes when this stuff is taking over, everyone decides to not do anything because they don't want to have to compete with all of this stuff for attention. But there were some other things happening in the space in the last 24 hours, namely the Wayfinder Prompt token was launched yesterday. This was the token, the kind of highly anticipated token drop from the team behind Parallel, the very popular Web3 gaming platform who made Colony. The token, just as a quick reminder, is powering the omni-chain AI ecosystem, which allows you to interact with its AI-driven agents. So you can basically speak into the protocol in plain text and get it to perform blockchain transactions. So that's why people were excited about it. That's why people thought it was cool. But it came out at, well, it's kind of risen to around a $200 million FDV. Remember, they have this connected token, which is the Prime token, which is the original gaming token. That is now down 8% at 330 mil FDV. The Wayfinder Prompt token is at 200, so kind of collectively around 550. At its highest, and remember, one of the ways for you to be able to get Prompt was by, I think they called it caching. You had to cache your Prime token. It's basically an alternative form of staking. You had different options. And I think there's two big criticisms of how this has played out. One I'm going to deal with, one Bread's going to deal with. The first was the fact that a lot of the people who cached their Prime tokens in order to get a slice of the Prompt tokens, once upon a time, the Prime tokens were trading as high as $27. That would have been a $3 billion FDV. So that is down almost 90% in a year. So you'd hope that the tokens that you get offset some of those huge losses that you incur by holding the token / staking it. But it appears to be the case that the people who locked up their tokens were rewarded much, much less than Kaito yappers who were yapping about, and for people who are unfamiliar, just like tweeting about the protocol. Nowadays, lots and lots of teams are incentivizing social media content by tracking people's social media on Kaito. And so those people did pretty well. They were like quite generously rewarded relative to the amount of time and effort that they put into creating content about the protocol. But those people who locked up their tokens for a really long time basically got wrecked, like in a really, really egregious way. So that was, I think there's no two ways about it. There's no way to sugarcoat that in any way. So that was the first maybe criticism coming out of yesterday, outside of the fact that maybe the number is too low, but that's always a complaint that's going to be in the space. Brett, you brought up another interesting quirk, which you became aware of more on the technical side, which was a bit disappointing too, but is also still newsworthy.
Yeah, so this one actually had a few different angles of conversation, right? Like a lot of people were talking about the qualitative stuff, right? Like the communications was a little murky, right? Talking about like who's going to get actual allocation. Was it yappers? Was it emerging yappers? Was it whatever? So like you saw a lot of conversations around that. But the biggest one for me was on the day of claiming, a lot of these people were getting murked by the actual contracts. So like most of it is the juxtaposition of this is a platform that's about, like I even talked about it entering the show, right? Like I wrote a smart contract using Wayfinder and then deployed it and did stuff, whatever, right? So like it is a protocol that it should be synonymous with like quality on-chain stuff, right? You want it to be high quality contracts, logic, all that stuff. The other day there was a review from Pop-Punk official, who's like or not official, but Pop-Punk, who is a big smart contract reviewer optimizer, and he saw that it was like low quality, right? You could read the contracts whenever they're deployed, and he saw it, and he's like, there's some hard coded values in here. There's some things that are maybe not up to par with industry standards. So he's like, that's pretty funny to see that all that's coming out of a project that is supposed to be doing this stuff for other people. So you would assume some level of prowess. And then just on the time of claiming, yeah, so you can see here, Ultra is another high quality dev in the space, does a lot of work for Mega ETH. Upon claiming, noticed that he didn't actually get the funds, right? So like he tried to claim it and the funds were taken by someone else. And you can see here in the highlighted pic that Yoink is associated to a lot of these claims that were going out. And it's because someone,
So what does that mean?
Yoink is like, I don't know if this is some British shit, but like for us, Yoink is just like, I took it, like I stole it out of your back pocket, right? Yoink, like it's kind of like yeet, but stealing instead of throwing. So what this dev did, and it actually associates to a Twitter handle that is like Yoink5675. So like this person's like leaning into it heavily. So what they're doing is, because the smart contract does not explicitly say that the claim has to go to the person actually taking the funds, like initiating the claim. They sat there, they saw when someone was going to claim, and then they basically just stepped in front of the claim and said like, okay, we'll just take that. And I can just go to me instead, and did that for like $220,000 worth of claims. So people were going, hitting claim, and then it was going into someone else's pocket.
Oof.
Yoink.
That is not acceptable. Absolutely yoinked or yeeted. Oxy, which verb are you going with here? Your hand is raised. What did you want to come with?
Throwing. You yeet something, but you get yoinked.
Oxy, you're the deciding factor here.
Oh, well, yeet, the way you said yeet was spot on there, Brett.
Yeet.
I got a kick out of that. So I guess really quick on an update on that was, so they actually just came out, that the company that did the contract, which was Token Table, they came out, you can now claim through the Kaido site again and get the allocation of the amount of tokens you're supposed to get. But then also through their website, you can actually get a compensation of like token price fluctuation. So they're making you whole. I think it was like, they put it in their post, 0.22, I think is what the price range was that they are going to be giving you USDT to make up for the lost profits for people that weren't able to claim. So
yeah, that's right. I've got it on the screen as well, Oxy. We've set the prompt reference price range from 0.22, which is the highest hourly swap rate to date, to the average price between, okay, yeah, something like that. Did you, sorry for interrupting. You can finish off.
No, I just wanted to bring that up and mention that to people. If people were waiting to claim after not being able to yesterday, I just wanted to make that point.
Perfect. Thanks so much for bringing that up. That's super helpful. Also, shout out to JD in the comments who shared that article so that I could bring it up. So, like a little bit of live research with the crew, always super helpful. So yeah, if you're still looking to claim, seems like you're gonna be compensated for that. So that is good news. Final headline, Brad, we had a huge Cryptopunk sale. Wondered if you could just give us the core information here. It's not a huge amount of information, but the bigger question I was wondering is, are NFTs a way to sidestep all of this crazy market behavior? Are we going to store our value there? What are your thoughts?
Well, the fact that this one's denominated in ETH makes it kind of a tricky proposition, because that thing has been not great over the duration of this thing selling. So I like to watch you talk about the user journey. So like you just scroll down there a little bit. So it's for Cryptopunk 3100, right? It's an alien punk. It's very premium blue chip. It sold at March 4th of 24 for 4.5K ETH, which is like roughly $16 million over the life of the NFT. So that was March 4th of last year. They tried selling it on November 20th for 5K ETH, which was 15.6 million, which would have been a little bit of a loss. They then tried selling it again, December 7th for 4.75 ETH. So a little bit less than their previous November one, for 19 million, which would have actually been a profit, right? They would have turned $3 million over the course of a month. It went from a $500,000 loss to a $3 million profit, just to show you how volatile this space is. Someone then came in March 1st of this year for 5K ETH, which is a little bit more than the previous offer they tried to do, and also more than they bought it for initially. And yet that was a $5 million loss. So over the course of about a year, that's the journey that it had. Then they tried selling again March 2nd for about 600 ETH less, which again would have been another like $1.5 million less. And eventually finally got the sale yesterday, April 10th, 4K ETH for $6 million, which is a $10 million loss over the course of that year. So the proof is in the crypto pudding here. Do not store your funds here if you think you're going to get away from everything else.
I mean, you could store your funds there, but God, what a ride! Can I?
Yeah, I mean, you could do whatever you want.
Yeah.
Would I advise it? No.
Can I just double click on one thing? Like one key learning for me when it's actually really interesting to look back at NFT prices, particularly because they're denominated in ETH. And as you picked out, this one on March the 4th of 2024, when 4.5K ETH was 16 mil.
Yep.
So that
they sold it for 500 ETH less and a $10 million loss.
The irony is that the last time it sold before that was also in March 11th, 2021 for 4.2K ETH, which was 7.6 mil. So basically, even
Right
then, a
back home.
better ETH price than now.
Came right back home.
I want to give like maybe a different learning from this though, then be curious to hear David's thoughts. Cause I know you guys, I don't know if you're still running the NFT fund. I know you were involved in some NFT fund at some point in time too. So just curious for your general thoughts here in allocating capital in this way. But the thing that I'm taking away from this when you zoom out and like look at the general market is 4.5K ETH being worth that much in March of 2024 is crazy to me, because when you think of the mania that we've just been through, I don't think I remembered it being in any type of mania phase back then. We've obviously just been through at the back end of 2024 and at the top of 2025. That was like maybe hypermania. But it just shows that this stuff moves much earlier, in my opinion, than people are aware of and give it credit for. And it takes a lot longer for people to realize that we're in a crazy mania than it should, basically. Like the idea that would have been the price at that point in time, and that would have been an incredibly generous price. And maybe I assume then we were much further along in that kind of hype cycle than anyone would have thought back in March of last year. Whereas everyone can point directly towards AI agents at the back end of last year and say, right, this is what was going on at the end of last year. Complete insanity into January, fine. And because of Trump's inauguration as well. So all of that stuff, okay, fine. But I just think that some of this stuff moves much, much earlier on, and you just kind of take it for granted at the time. That's one of my learnings. David, curious to hear your thoughts as we kind of close out here.
Yeah, I mean, we, like you mentioned, a couple of years ago started co-managing an NFT fund after it kind of needed managers to step in. Most of what we did was kind of offload a lot of those NFTs and focus more on the VC side of things, just because that's where we have an edge. We do own punks. I think punks will always have a special place in anyone's heart who's been around here for long enough. It pains me to see that 10 million loss. I think it's brutal. It's more, as you can see, it's kind of an ETH problem versus a punk problem. But I think investing in NFTs is so hard. They're luxury goods. You obviously see people like Raoul Pal saying buy art, but it's super hard to get an edge, I think, in the NFT space these days. So just invest with caution, buy things you actually want to own or you like, or that sort of stuff, as more of an emotional thing versus a long-term investment. Because as you can see, my God, like 10 million loss, whatever that is, 70% down versus 10% down in ETH is rough.
Yeah, I think that is rough, but I mean, at least a proportion is tied to not only operating in any volatile asset in crypto, but ETH's specific plight over the last 12 months. I think something like that can only, well, it's possible with all of the crypto assets, but specifically in this period of time was a hard time to be denominating in ETH with NFTs. So There you go. Interesting stuff. Guys, that is the end of the show. Hope you enjoyed it as usual. We do this every single day, Monday to Friday at 7 a.m. Eastern time for 1 hour live on X Video, YouTube, Apple, and Spotify podcast too, if that's how you prefer to catch up. Thank you to my legendary co-hosts, got legendary Brett and David from Silvermine Capital. Thanks to our contributions from Oxy today up on stage. We hope you have a wonderful day, a wonderful weekend, and we will see you on the other side on Monday. Bye-bye.